The volatility in the market continues. While right now you may be just a smidge in the red, but that was definitely not the whole story, because look at those jagged edges on your screen that we had throughout today's trading session. Now, of course, on our way to recovery, but let's see whether it sustains through the last 1 hour of trade or not. But that said, what's under pressure today? Once again, BEL. PSCs are having it rough today. So not just the large caps like a BEL, but look at what's happening with an NBCC, for instance. That's cracked a good 5% in trade. There's HAL, which is currently down 4% in trade. Look at NBCC, 78 bucks is where that stock is. Hindustan Aeronautics, 33.29 on that stock. There's BHEL, which is cracking very hard. Another 5% of a loss coming in there as well. So some of these PSUs, irrespective of the kind of selling that you've seen in the PSC index, these stocks seem like there's more selling to go and more pain ahead for them. What's aiding the recovery? Reliance Industries. Look at that intraday graph, because that's pretty much in sync with what's happening in the index right now. It's pulling up the index along with its weight. Axis Bank holding out well. There's Maruti, which is now breaking into the green. Bajaj Finance, HDFC Bank, a smidge in the green right now as we speak right now. And select IT names are not looking bad. So Wipro, for instance, is one of the top movers on the index today. TechM is holding out 1.6% in trade. Infosys as well pulling up its weight, holding marginally in the green as we speak right now. And other than that, there's Kotak Bank as well, which is not looking all that bad. But are we out of the woods? What's the market texture looking like? Let's welcome on board our experts and figure out exactly that. We've got Deven Choksey on the fundamentals, Kunal Bothra and Naresh Mirani joining in on the technicals. But Kunal, let me start off the discussion with you first. What's the market texture telling you? Because as we're approaching closer to the expiry, the intraday volatility is getting pretty high.
Yeah, it's getting pretty high, but now I think it's still getting restrained towards maybe the first 1 hour of the market move. Now, yes, the mid caps and the small caps today also, I think start to see a sharp correction. We saw almost like a 250, 300 point kind of a sharp correction on the bank Nifty from the opening highs, and then similar was the case in terms of percentage for the Nifty. But there's one thing which is coming out as a very strong support or a floor point for the index, and that's the 22,800 mark. So today's low on the spot level for the Nifty was almost at 22,800, 801 on the spot Nifty. So this is the fourth attempt for the index, and in the previous three attempts we were discussing earlier also that the markets have seen good decent bit of bounce back. So we can just expect that maybe 2200 mark is now acting as a major pivot point or a zone where the index is finding strong bottom for itself. And if we manage to see a bounce back led by large cap names, then I think this time around also the bounce back could be at least 250 to 500 points also.
Right, so that's what you need to watch out for when you talk about the benchmark indices. With Kunal, I would like to draw your attention to the Nifty Auto Index. 7th consecutive day of decline coming in for the auto index. It is in fact set for the worst run since late February 2022. Below is all key DMAs, is it?
Yeah, below it's all key DMS.
So what's the outlook here? Because if you look at the data that's indicating, except Maruti, all the other auto index counters, all the other stocks in the auto index is down on a YTD basis.
Yeah, it's down, and I think today's one of the reasons why auto index is down is because M&M has started to crack. I think that for the first time, I think in the last many days, we've seen M&M.
Even yesterday it was under pressure actually.
Yeah, but the stock today is fallen below the 200 DMA, so that's a more critical break of a support for M&M. But we did a ratio analysis on the auto stocks or the auto index with respect to the other indices, the Nifty 50 benchmark index, and then relative to the other sectors. And it seems like that the Nifty Auto Index was getting into a bit of a frothy territory when we look at this from the September-October highs for the index. And when we look at these sectoral turnarounds in terms of the ratio charts for many of these indices, that's a process for at least 3 to 4 quarters. So which means what we've seen is just 2 quarters of underperformance from the auto pack, where we've seen the auto stocks, some of them falling by 30-40%. There could be a possibility that this trend would probably get into a drag. The trend for the auto index would be on the downside. I would not be in a hurry to buy this dip.
Okay. In the meantime, let's welcome on board Deven Choksey as well and find out what he's making of the market right now. Deven, hi. Good to have you in the show. Guess the question on everyone's mind is how much more pain to go before we actually see at least a sustained recovery? If not that, at least the selling should abate.
Yeah, Aisha, good afternoon. I believe that I think we are at the tail end of selling in the markets. Maybe I think the larger part of the pain is over. If you see the data of FPI selling from October onwards till date, except couple of months in between, I think now in this month we are likely to see the little lower selling compared to what in previous months we had. Maybe my understanding is that they have actually, I think, already short sold against their portfolio in the F&O market earlier, and currently they are delivering the cash market deliveries and taking the money out. So on one side, I think they have already earned the mark to market by short selling the market, and on the other side, I think now they are picking out the capital. That's what they are doing, and this process is likely to get over sooner than later. Maybe some amount of capitulation is not ruled out, particularly in the crazy valuations of small and mid caps. That could be one of the area, but otherwise in the large cap stocks, particularly in the Nifty 50, where the valuation comfort has also started coming in because of less than 20 times price earning ratio at which they are currently quoting. In my viewpoint, I think the large caps are relatively looking more stable at this point of time. The ceiling pressure over there, I think, has significantly reduced as I see it, compared to, I think, the vulnerable mid cap and small caps, I think, which is continuing to exhibit higher amount of pressure even at this point of time. But that is at the tail end of selling as I see it currently.
Right. Good afternoon, Mr. Choksey. Cheryl also joining in the conversation. And yes, hopefully we are at the tail end of this selling, and I'm sure everyone's really hoping for this one. But I wanted to understand and gauge your take coming in the IT index in particular, because this one today, if you see, you have Tech Mahindra that is seeing a very good run. You have one note which is backing that Tech Mahindra among the large caps will be one of the counters that is likely to see more upside. On the other hand, you have another note coming from JP Morgan, which is actually betting on persistent systems. But what's your take? Which side of the IT should one look at, the large cap space or the mid-tier IT companies?
So importantly, I think having seen the IT companies underperforming in the market for a longer period of time under a variety of threats, a significant amount of short selling has already happened in these counters, and today we are seeing the outcome of short covering, which is basically driving some of the stock prices. And that's exactly likely to happen with some of the broader large cap companies going forward, because market is in oversold territory. Technically, at any point of time, I think when the market is in oversold territory, I think any point of time, I think when the recovery starts happening, the first thing would be the short covering. And that's what I think one can argue for even the broader market also. What one is seeing in IT could happen in the broader market as well. Now, as far as the choice of the company is concerned, certainly the preference remains with some of the mid-tier IT companies where their engineering R&D business prowess is basically helping them in getting significantly large order compared to their size for execution purpose. And they are giving the visibility of 4 to 5 years in respective field in which they are operating. So our take is that engineering R&D space within the IT could be relatively a better choice. The frontline IT companies, they may probably see the larger amount of inflow of orders going forward because of the distinct change happening in the global environment, particularly with the adoption of AI and the computing. In my viewpoint, I guess I think those companies would be on a larger base, relatively slow to grow compared to the mid-tier IT companies, which are likely to grow relatively healthier pace compared to the others.
Right. Okay, Deven, hold on to that thought. Lots more to talk about with you. For now, we're going to take a very quick break. IT definitely is leading the recovery in the market, but let's see whether the Nifty can pull up further than where we already have.
Now, if you look at the market, steady recovery underway coming in for the benchmark, and to see some interesting comments coming in. Remember that you had the United States and Russia that were meeting at in Riyadh, and some comments coming in from Kremlin where they're saying they cannot give an evaluation of the negotiation with the United States officials as yet, but they have only started. They're saying that the main thing is to achieve our aims. They're also saying that Putin has repeatedly said that he is ready to speak about peace. So those are the comments coming in from Kremlin, given the fact that the meeting has just begun. So let's wait and watch out what transpires out of that meeting. But let's put the spotlight more on the markets and how should one actually trade in this sort of a market. And we already have our experts with us, Kunal, Naresh, as well as Mr. Choksey, who are waiting by patiently. Mr. Choksey, let me come to you. And we did speak about the IT index a short while ago before you could join us. I was talking about the auto index and trying to get the technical take on this one, given the fact that it's falling for a 7th consecutive trading session. and also the charts were indicating it was bound to kind of go that way. But fundamentally, for the auto pack, what's your take coming on this one? Because given the fact that yes, we've got the consumption boost, and a lot of commentary is around the fact that people will look to actually upgrade in life, and auto also would be one of it.
Absolutely. And I think selective buying in autos at a corrected valuation is the only answer to this particular observation that you have made. In my viewpoint, I think the fundamentals remains absolutely intact. Consumer demand is also remaining intact. At the same time, government spending significantly large amount of money on building the infrastructure, making it possible for higher amount of commuting for one and everybody. So transportation sector in particular is likely to see the mega growth going forward as well. Leave aside one event of Mahakumbh, in which I think you saw the significant amount of movement in the transportation sector. But in the general condition also, I believe that I think this is going to be growing significantly. So given the choice, the transition is already happening from ICE engine to EV. The choice is already happening. Mahindra and Mahindra's advanced booking for two vehicles in EV is, I think, a proof of this particular choice that the consumer is exercising. In my viewpoint, I think this is only beginning. Maybe I think the corrected valuations in some of the auto companies and auto ancillary companies, they demand a fresh look for building the portfolio. In some cases, definitely, I think we are seeing more than normal growth coming from now onwards. I think for some of the companies in their working from the fourth quarter onwards and thereafter.
What one has keenly observed is that in the recent correction, the first signs of the dip actually came by within the entire PSU pack. That, of course, it was one space where you had concentrated gains. But the selling there persists. Even as I look at it today, likes of BEL, NBCC, BHEL, HAL, they're still seeing selling. Are there any pockets within the entire PSU basket where you think the correction is now overdone and one can start nibbling in?
Aisha, I think the trouble lies with the weaker hands. I think those who have entered into this particular stock without understanding what these companies could deliver, they are the ones who are exiting this company at a panic with a panic in these counters. We have been repeatedly saying that some of the PSU companies are excellent businesses. However, I think the growth that they can produce is going to be always limited or in parity with the growth in the economy, that is GDP. So, frankly, I think when one is giving the higher valuations to this company, certainly it is discounting far more in advance about the prospects of those companies, which otherwise remain stronger because of government spending on infrastructure, among others. Having said that, I think some of these companies have had a sharp correction by now, and the prices have become slightly more affordable compared to what they were before. Not completely sure whether I'll put my 100% bet on them immediately because of the fact that I think the weaker hands are still holding the stock. And in any subsequent rally due to recovery in the market, they would be the ones I think would be coming up front and probably sell some of the stocks. That's where I think one would like to play a little bit more cautious. Maybe some panic selling on some day in some of the counters could be buying opportunity, at least I think for recovery in the shorter duration thereafter.
It's been so good having you on the show. Thanks as always for your time.
Thank you.
Okay, let's get in some closing ideas as well before we take that break and continue tracking markets and the last half an hour of trade. Kunal, what's looking good to trade right now?
So I'll go with the band Wipro. That's a chart and a stock which has bounced back from its 50-day moving average, just around the 305 mark, and also on the candlestick front, it's forming a potential bullish engulfing pattern. So on the back of it, would be bullish on Wipro, at least from a near-term play.
Right. Naresh, what about your closing ideas?
So looking at a bounce back on NTPC, the stock had made a bottom around 295, 300 back in January, a month back. In the last 2 days, reversed from the same area. So expecting a bounce back towards 320, 330.
Okay, let's take a very quick break. The recovery.